Hi everyone, my name is Margaret Diedrich and I am a junior at Marquette University covering the energy sector. Today I will be pitching Renewable Energy Group at a price target of $53.12, representing a 73% upside to Marquette University's Applied Investment Program's Small Cap Fund. I would like to clarify that this is the correct price target and upside based on my valuations. There was an error in my write-up where the top box is representative of my DCF value. Thank you so much for tuning in, and I hope you enjoy the rest of the presentation. Renewable Energy Group Incorporated is a global producer and supplier of renewable fuels. The company operates through a biomass-based diesel segment, which represents 96% of revenue, and a service segment, which represents 4% of revenue. RGI specializes in converting natural fats, oils, and greases from feedstock and animal byproducts into advanced biofuel. Renewable Energy Group generates 82.3% of revenue in the US, 4% in China, and the rest from various European and Asian countries. The company was founded in 2006 and its IPO was in 2012. The company is headquartered in Ames, Iowa, United States. Renewable Energy Group is in a prime position to capitalize on the shifting energy market. REGI is the leading producer of biodiesel, a form of diesel fuel that is derived from plants and animal byproducts. In early 2021, REGI's Gulf Coast facilities were struck by Hurricane Ida, and they were forced to close their production for 2 weeks. Prior to this natural disaster, REGI had issued a restatement of their revenues for the 2018, 2019, and 2020 periods. Overall, the company had restated 1% of revenue over the 3 years due to an additive system failure that caused REGI to be improperly identified as the claimant for certain biodiesel mixture excise tax credits, or BTC. These events caused a severe stock market overreaction, and the price subsequently fell from nearly $120 to $37 per share over the past year. The market has not yet adjusted for the favorable financial results REGI is delivering and the potential for mid-single-digit revenue growth in the energy space. Oil and natural gas consumption are projected to reach peak demand within the next 15 years. In the interim, while governments and companies are searching for a reliable and cost-effective renewable replacement, the biomass-based diesel is a viable solution that is both high in energy density and low in carbon emissions. This opportunity is driving customer demand for a clean source of fuel during the energy transition. Every fossil diesel burning fleet has the ability to transition to bio-based diesel without additional infrastructure expense. This growing demand for bio-based diesel is evident in a 12% increase from 2019. To prepare for the anticipated future growth in demand, REGI is building out their downstream operations by acquiring more biorefineries, and these acquisitions will produce a 73% increase in capacity for the next 2 years. The current price is not reflective of REGI's financial performance and potential demand. Therefore, it is recommended that our Renewable Energy Group be added to the Ames Small Cap Fund with a price target of $53.11, representing a 37.05 upside. Diesel fuel demand is projected to increase in the short and long term. Biodiesel is a direct replacement and additive to petroleum diesel. As the world begins to regain a sense of normalcy in the post-COVID pandemic period and economic growth increases, diesel demand is also expected to increase. Commercial and personal travel in 2022 is expected to surge, with the trucking industry recording bookings greater than pre-pandemic levels. This comes in the wake of 2021, which saw a 64.5% decrease in travel from 2019. This trend is already evident in 2021 as biodiesel sales have increased nearly 70% in Q3 compared to the same 3-month period in 2020. This trend is reflected in the valuation. Biodiesel revenues are projected to grow at a CAGR of 3.45% from 2022 to 2025. This increased demand presents an opportunity for REGI to capitalize in the short term, while in the long term, experts project peak oil demand to occur within the next 15 years. Renewable Energy Group has implemented strategies to expand their downstream business and increase margin growth across operations. REGI recently acquired Amber Resources. This acquisition will increase capacity by 60 million gallons per year and adds 8 locations in Southern California. These locations improve REGI's direct-to-consumer approach, allowing them to offer competitive pricing and capitalize on credits by eliminating third-party transport. In addition to the acquisition, REGI's completion of an expansion project at their Geismar, Louisiana refinery is due to be completed in early 2024 and is expected to deliver 340 million gallons per year, a 240 increase in the facility's capacity. Overall, the acquisition and expansion represents a 71.4% increase in overall capacity across all facilities. These actions translate to a reduction in REGI's cost of goods sold, improving future margins. REGI's management expects to continue to increase capacity growth through acquisitions in the near future. Biofuels will be essential in the energy transition. It will take several decades for renewable technology to become a viable option to power vehicles and air travel on a mass scale. Meanwhile, biofuel works today with no additional infrastructure build-out or burden on customers. Biofuel works in petrol diesel engines and can reduce emissions by 80%. After some reliance on the government incentivizing biofuels, there is now a sustained demand from customers. Businesses are setting their own carbon-reducing pledges, and biofuel will be an essential energy source in the interim. Coupled with the increased demand from customers, governmental programs are favoring biodiesel production and use. To reach intrinsic value for REGI, a 5-year DCF model was created, using a terminal growth rate of 1.75% and a weighted average cost of capital of 10.22%. An intrinsic value of $47.64 was reached. A sensitivity analysis of the terminal growth rate and weighted average cost of capital plus or minus 50 basis points ranged from $42.76 to $57.40. Additionally, an EV to EBITDA multiple valuation was calculated using a weighted average peer multiple of 17.76, resulting in a relative value of $57.72. Finally, a price to earnings multiple valuation was calculated using a weighted average multiple of 20.76, resulting in a relative valuation of $97.15. By weighing these models, 80%, 10%, 10%, a price target of $53.11 was reached, representing a 37.05% upside. I would like to reiterate again that this is the correct price target and upside, regardless of what it says in the write-up. The 3 risks I identified for REGI are another pandemic, the price of feedstock, and government regulation. Renewable Energy Group is reliant on diesel demand, which is influenced by international and domestic travel. Another pandemic or prolonged COVID-19 restrictions could have negative impacts on the company's bottom line. The price of feedstock is also a risk. The spread between bio-based diesel prices and feedstock costs directly impact margins. Prices are volatile, which could have adverse effects on the company's operating margin. And finally, government regulation. Historically, 15 to 20% of REGI's revenue comes from government incentives in accordance with the Renewable Fuel Standard program. If this program was to change unfavorably for REGI, it would have material adverse effects on the business. Cynthia J. Warner is the president and Chief Executive Officer of Renewable Energy Group. Ms. Warner has over 40 years of experience in the energy industry and has served as CEO of REGI since 2019. Prior to her current position, Ms. Warner held multiple executive positions in both petroleum refineries and renewable energy companies. Her educational background is in an undergraduate degree in chemical engineering from Vanderbilt and an MBA from the Illinois Institute of Technology. Craig Bielmer is RGI's Chief Financial Officer. He has over 28 years of experience in finance and consulting roles. He previously held the role of CFO for BP's downstream North American fuels business, and his educational background is in an MBA from Wharton School of Business.